And welcome, Canada Startup, the new year. Bill Wilson, how are you today?
Doing well, thanks, Dave.
Fantastic. Today we are going to talk about stocks, investing, different types of ways, particularly focused for baby boomers, given that we're both the last year of the baby boomers, I believe.
Yes, we're the last.
So this is not financial advice. This is strictly for education. And so we've got our little disclaimer there because in Canada and the States, having a disclaimer is very important. So anything
Definitely.
you might want to say about a disclaimer, and do you believe in disclaimers, or is that something that it's just what it is?
And I guess the simple or the polite way to put it, with the way things are now, having a disclaimer is beneficial for everybody on both sides.
All right. Well, we'll definitely look for ways that today's session is really going to talk about specific stocks because it's something that we believe in here, and that we have an investment universe. We've never been necessarily taught how to do this. It's one of the things that if I had a magic wand to shift things in the education system, it would be about financial literacy. It would be teaching our young ones about credit card debt, looking for ways to teach and to share and to inspire different ways to look at money, having a relationship with abundance. And these are things that I know you're aware of, and you're curious. At our age, we're both still learning.
Yes.
So the first little question in this process, which was originally designed in 2011, it was designed as a method to help entrepreneurs become more aware, and to actually anyone who really wants to scale their business. This is a how to be a better entrepreneur in 33 minutes. And so the questions that we're asking are about increasing awareness. And if you're a businessman who's looking to scale, getting into funding, knowing the different ways to fund and scale and borrow and do equity issuances are part of the financial acumen that an entrepreneur really would need to have if they're going to scale their business. And so today we're going to do an experiment. That's one thing that I know you enjoy.
Yes,
so
definitely.
Just as you think of 5 or 10 different companies, what companies do you admire? Which companies are you aware of? Maybe even some that you've worked for, publicly listed companies that you could invest in.
Probably. Well, actually, the first one that would come to mind is Walt Disney.
Excellent, Disney, fabulous. Keep going.
I was in the tech industry, the cellular industry for so long. So like Bell,
absolutely.
Qualcomm,
absolutely.
TELUS. For 3 of those.
Yep.
What else? What about somebody like Molson's?
Absolutely. Molson's. Keep on going. How about I help you with maybe financials, energy, transports? Any ideas when I say that?
Well, I guess I will admit, and I'm proud of it, I am a Leaf fan, so I'll say MLSE.
Okay.
And what else we got? Financial, maybe TD, Toronto Dominion.
Yep.
Energy, maybe Enbridge or something like that.
Super.
Sticking close to home for, I guess, a fair amount of the stuff.
Well, again, this is an exercise that if you're watching this today, or you want to watch this with your family, your kids, just have a talk about the different companies. And Bill's got a great one here with Disney, Bell Canada, TELUS, Qualcomm, Molson's, Maple Leaf SE. There's another one that's very popular. Is Madison Square Gardens is an actually an investment. Cool. TD, Enbridge. If you're into gambling, it could be Wynn. It could be some of the new ways to bet online. And so that's a pretty good list. And so the next little step you would do is you might go and Google search the different types of industries, because what we're doing today is looking to create a portfolio that's diversified. And so that you would have different investments in different industries so that you're actually getting information, because once you become a shareholder, the company starts sending you information.
Oh, cool.
If you actually are interested, you could go and read their first page of their financial reports, which tells you their 5-year plan. And so, isn't that cool that all that information is there for you if you just go and see Disney's next 5-year, 10-year plan.
Yeah.
If you have a business, wouldn't it be cool that maybe something you were doing might be including virtual reality or artificial intelligence or data analytics? And then if you start doing your own business plan, you can cut and paste and you can create a very fascinating, engaging presentation to your potential investors.
Yeah, that'd be cool.
That's like a little bit about learning and earning, which is what we're here to do. So when you think of the different industries, is there any of the other industries or any other types of investments that sort of pop up for you?
What about in food?
That's what I was going to just get. It could be consumer goods. So it could be something like 3M.
Okay.
It could be Procter and Gamble. And then foods, it could be fast foods like McDonald's, Yum Brands in China, Domino's Pizza. So these are companies, when you look at the big box stores, you could talk about Walmart, or the one that's taken the retail industry and totally thrown it on its head, Amazon. We're talking retail is fascinating because one of the biggest retailers that is often confused is Apple. Apple these days is considered not only a technology company, but really an online retailer. And so now going to drill down a little bit more. We're going to come up with 4 stocks for you to have as your portfolio. And what you do with that is going to be something we can talk on an ongoing basis. Yet core 4, I talk about a financial, a technology company, a communication company, and an energy company.
Okay.
Now, wouldn't that be a cool basis of your first portfolio?
That'd be very good. I'm interested in all that. So
exactly.
That'd be great.
By having one in each, now you could take the best of breed approach, which is getting the best player in each of those industries, or the ones that you like. Because if you like them, then you're more disposed to go and study and learn and maybe add to it. And this is not a one purchase put in the closet or the dresser. It's about making one investment, but then maybe starting what's called a dividend reinvestment plan, or DRIP. Because in Canada, if you have a portfolio in a financial institution, there is a button that you can hit and your dividends can be reinvested. So every quarter or every month, you're buying more shares. So it's almost
that'd be
like
nice.
saving.
Yeah.
So let's pick a financial. You said TD. Would you rather TD or Royal or BMO or CIBC or JP Morgan? Which financial would you like to have in your portfolio?
I'm going to say TD.
Super.
Toronto Dominion.
I've crossed. I've got a little pad paper here.
Okay.
I'm inviting anyone who's listening to this, grab a paper, grab some pen, and start just drafting your own portfolio right now. So how about technology? When you think technology, you mentioned a few. Which technology company would you like to be an owner of?
I'm going to go with Bell.
Fantastic. What would be 1 or 2 of the reasons why you would pick a Bell?
I'm very familiar with it. That it's part of an industry that's always growing. They have more than just, they've got landline, they've got cellular, they've got radio. They're into quite a few different methods of communication, and the communication that they deal with is the technology's in the forefront. They're going into the 5G right now, the 5th generation of wireless communication. So, they're always moving forward like that. So with the way people people need to communicate. And I mean, if anything that we're going through right now, we're going to need that sort of thing.
Well, Bill, it's one of my top picks that I just recently invested in. I am going to share something with you if I can get it, but maybe I won't be able to today. That's okay. I'm going to invite you to go online after this call and put BCE Yahoo Finance. And one of the things that will then show you is a screen that will show you the range 46 to 65 in the last 52 weeks, a price right now 55.11, a dividend of 6.04%.
Nice.
Isn't that crazy? And then the 1-year target's 59.80. Yet, if you started investing in that right now, you'd be getting 6% on your money. Right now, your money is probably in a bank account getting close to zero.
Yeah.
And so that's one of the things that I'm really encouraging our investors to do is put some money into dividend payers. And you're absolutely right. It's going to have some ups and downs. Yet when these stocks go down, that's when you even nibble a little bit more. And so a
So
good core holding would be BCE.
nice. Question I have on this. What's like your minimum? Can I just go in, I guess, set up my account, say with TD for the trades or whatever the purchases? What's my minimum buy-in? Like, can I just buy one, or is there a minimum?
Well, see, the funny thing is this has been the change in the last 3 years, because in the States, a couple of platforms have come in called Robinhood is the most famous. And now we have millions of new investors because they allow you to do fractional shares.
Okay,
And so, yes, you could do one. So some of the young people I've been working with, they're trading 6 times a day because, first of all, there's no transaction cost. And
right on.
second of all, there's fractional shares. We're not that fortunate in Canada. We have something called Wealth Simple that
Okay,
allows you to do transactions for free, yet we don't have fractional shares yet.
so
So you
sorry,
could
go
go
ahead.
in if you go for a full broker like TD or RBC or CIBC. We'll have probably a transaction fee of $9.99,
Okay,
$9.99. So you probably want to put something in like close to 500 as a first investment.
okay,
So if I'm talking portfolio for you, I started with my millennials, and I started what would be the way to invest $2,000. So for us, we're talking right now. If you put in say 2,000 and you had 5 shares, it's about $400 each. To buy it, it's going to probably cost you between 40 and $50. And if you scale up a little bit, then you'll have your costs per share as a little bit lower.
right on.
Does that answer your question?
Yeah, yeah. No, I always thought you had to spend like 10 or 15 grand just to buy one stock, and
Well, when we were growing up, it was $30 a buy minimum, $30 a sell. So if you're doing just a $300 transaction or a $200, it's quite a sum in and out, and that's why it was a little bit price inhibited. Now, though, with the discount brokers, but also the free trading, it's something that has really spurred the market in the last 2 years and has added quite a bit of new types of volatility.
okay.
So you've got your TD, you got your BCE. How about either a technology or another communications business or an energy business, or again something that you like?
For technology, I'm gonna go with Apple.
Excellent. You can't go wrong with Apple. Again, if when you go on Yahoo Finance and you type in Apple, you'll see the range for Apple has just been on fire this year because it's one of the biggest companies in the world, if not the biggest right now. It's gone from 53 to $138. We're sitting at 128, 80% up this year.
Wow.
And it's just been a monster. And it's still got a lot of triggers. A lot of people right now are the analysts are saying it definitely looks bullish unless we get a massive sell-off in the market. So you're probably, as a core holding, Apple probably won't go wrong. All right. So we've got. I just did a check for you for your Molson investment. The way you might do that is called TAP, which is Molson Coors Beverage Company.
Okay.
And so you could look at that. In fact, is that one you'd rather, or would you rather Maple Leaf Enterprises?
Hmm.
You can have both. Yet yeah.
I'll go with the MLSE.
All right. Maple Leaf. Let's see. Not sure. MSML. SE, Yahoo Finance. Well, I'm going to probably leave that one with you to check it out
Okay.
also. So Maple Leaf Gardens will be your fourth investment. So that would, do you have an energy stock that you might like? You mentioned Enbridge.
Well, that's who I deal with. So, and I think they have a dividend, right? That you could do through that, put it into that dividend reinvestment program.
Actually, Enbridge is a dividend aristocrat in Canada right now. Enbridge is, and that's what's nice about what you're doing is that it's one of you're using their service, and so to buy their product is almost like getting a discount on the services that you're getting. And so right now it's at 42.96, and it's got a whopping 7.86% dividend.
Wow,
And
that's
so
all right.
you can see that if you have Bell on one side, Enbridge on the other side, you've got your Maple Leafs on one side, and then you've got Apple, and you've got a pretty solid portfolio
Oh, cool.
to start off with your first four shares.
Right on.
And that's what we're encouraging is that for you and I as boomers, having 1, 2, 3 dividend stocks is a really great thing to do because you can imagine if in the next 5 or 10 years you develop your portfolio and you actually really focus on investing, getting a 6 to 8% dividend, your money will double in about 9 years.
Nice.
Just on your dividend. And then if we get any capital appreciation, it's considered quite a bonus.
So I guess there's a couple of ways, I guess, to look at that, right? So you could either, the dividends will either make you double, or if you're putting money in at the same time, you'll double even quicker.
Yes, you could double. That's one of the things that the power of compounding working for you. Most people stay poor because they got the value of compounding working against them, especially with credit cards. Because once you start paying 14, 15% and it's being compounded, many people will never be able to get out of debt. And that's why they'll have to maybe go and file bankruptcy or go to a consolidator. So when you have a dividend stock that's paying you 8% and you're contributing every quarter because you have an opportunity to buy the shares with no commissions, which is another gift that they do with DRIPs, dividend investment plans, you can really accelerate your savings and investing by getting involved in those type of patterns.
Right on.
So 2 areas that you've picked up really good ones because both of them are north of 6%. Given what we're getting for our deposit, it does make sense. And then if you're constantly dollar cost averaging, that means when it does drop, you're buying. When it goes up, you're buying. Yet over the next 5 or 10 years, there's a good chance that you'll be getting a double-digit return, which is what you're targeting for in this type of investment. So you've got 4 cores, and now we're going to go into the fun area that everyone is excited about, who's focusing on the markets and causing lots of FOMO, the fear of missing out, and that's your growth companies, your specs, and something we've talked about, your SPACs, your hot stocks. And I'm encouraging our millennials to have 1, 2, or 3 of these in their portfolio, mainly because it keeps them interested. It keeps them engaged and learning and asking questions. And those are things that will increase financial literacy as opposed to not being interested. So having an interest, but then also digging in and having a curiosity and perhaps even a passion for this will likely accelerate your financial literacy.
Cool.
So when you think of growth stocks, or you think of anyone that you would like to own, because this is also the area, because there's your universe is actually a lot broader than most people. Because when I first talk to many people, they don't have an idea of what they can invest in. Yet you did mention Disney. Would you like to be an owner of Disney? I think you love Disney. In fact, you've got a great relationship with Disney.
Yeah. Oh no, we're there at least every year we can.
Well, when you go on to Yahoo Finance and you type in Disney, you're going to be shocked because even though all of their facilities have been closed, their cruises, they still have gone up this year, I believe 80%.
That's awesome. That's incredible.
And one of the reasons is they really accelerated their online business this year.
Yeah, that
So right
streaming
now,
thing, they hit their numbers in like 1 year that they are predicting for 4 years out or something like that.
correct. And so that's a stock that you and I did talk about. I think when we first started talking about stocks, this year it's gone from 79 to 183. And right
Wow,
now
that's
it's
awesome.
sitting at 175. So if you would have dipped your toe in 6 months ago, you probably would have got a lower price. Yet
Yeah,
this is one of those stocks that you're not looking at trading it, you're looking at accumulating it. And you think in 10 years it's going to be better off. And that's where for you, I would be, yeah, it's Disney might be one of your nice parts of your portfolio that you'd like to talk about.
yeah, yeah. No, I mean, we use pretty much every aspect of their products, from the parks to the cruise line. Um, we have the timeshare, the whole bit. So might as well go one more step and get the stock.
Absolutely. So that's a really good one for you. It's aligned with your values, and you could learn a lot from them. That's what's beautiful about
Yes.
Disney too. In fact, I had a board meeting yesterday, and one of the people on the board is a 20-year veteran of Disney, and tapping into her creativity and her experience and her willingness to communicate and effectively build things is because Disney always had a strategy of a 100-year plan or even a 500-year plan. So very amazing company to be associated with. So, is there
Yeah.
another one in the arena of spec, SPAC, or hot stocks that you might want to have in your portfolio?
Wow. Um. Hmm.
One of
Well,
these,
what do you think?
go ahead.
What do you
And
think's the most popular stock available right now? What would be what kind of video would be shown out there that's showing the most popular stock?
okay, the great question, and if you go online today, the one that is hitting YouTube and is getting hundreds of thousands of views is a China electric vehicle company.
Oh
Stock
wow,
symbol NIO.
Neo.
And in
Okay.
the last 2 weeks, it's gone from 40 to 65.
Wow.
It had what's called Neo Day on Saturday, and it went up about 18 to 23% just on that day. It is the rival of Tesla. So
Oh, okay.
if you are into electric cars or into speculation, because Tesla is a stock I bought last year, way outside of my boundaries of traditional investing. I bought it at 300 and it went to 800, but it split 5 for 1. And so that went up over 12 times in 2020.
That's
And
crazy.
so Neo went up from $2 to 60.
Wow.
Yes. And it is now they're saying going from 50 to 60 to 2 to 300. So highly speculative. If you were to do a Google search a little, or actually a YouTube search a little after this call and type in Neo, you'll get like, whoa, a full screen. Everyone's talking about Neo. Now that might be a red flag when
Yeah.
it's too hot. Yet what we've been noticing, particularly with the Robinhood investors, is that they're taking some of these stocks. There was the whole power plug business today. This is the hydrogen as a alternative source.
Okay.
Up 15, 20, 25%. We with the new Biden administration coming in, there's a couple of industries that are going to be well received. One is considered the green industry. So that again is a Tesla friendly. That is different types of environmental. The other market that has got hot just in the last little couple of weeks is the cannabis market again.
Okay.
And so these are sectors that would be considered hot stocks. Hot stocks, you can
Mhm.
earn, you can also get burned. And so
Right.
yeah, having one or two in your portfolio, because whether you want to have a Tesla or the biggest, would you know what's the biggest company in Canada right now?
The biggest company in Canada. I don't know that. No.
I would imagine if you went to 10 Canadians, I would be very surprised if one or two of them knew. Because this past year, Shopify
Oh wow.
overtook RBC.
Wow.
Yes. And so Shopify is part of that online enabler for entrepreneurs.
Hmm.
There's Shopify, there's one in Singapore called SE, there's Jumia in Africa. These are platforms that enable entrepreneur. And then the big one in the battle, as we've just seen Tesla and Elon Musk becoming the richest man in the world, there's a big bet that Amazon's Jeff Bezos will probably take over for him this year. So there's going to be an interesting battle. Amazon is one that is just a lion. They've been devouring retailers, and that might be something that if you're using them a lot and ding dong, the bell's there and your Amazon products are coming, that might be one you could consider too.
Yeah, yeah. No, we even started using more of their products. So,
in your portfolio, I like to suggest 6 or 7 holdings as a start.
okay.
So do you want to pick 1 or 2 of those ones we just talked about, or do you want another sector, or do you have another question? Because that's a big part of today, is getting you interested in your portfolio, which you've shown a great interest. And it's this now maybe that Spec or Spac or hot stock.
I am curious about Tesla,
Yes.
but I'm also very curious about like Bitcoin, that whole, what's it called? Cryptocurrency or something like that?
Correct. So one of the things I'm going to invite you to do is what I just personally did is I bought Tesla, like I shared with you. And as it went up, I sold a little bit. So
Okay.
what that strategy is, when it doubles, if you sell your investment, you're then playing with the house money.
Right.
The last 2 months, what I did was I sold a little Tesla and then bought the NEO.
Okay.
And so now I've got both Tesla and NEO and having some fun with that. Okay.
Right on.
For you with Bitcoin, the idea here is Bitcoin and the cryptocurrencies. So Bitcoin is the #1 cryptocurrency. We'll probably have a show on this, a separate show about cryptocurrencies.
Okay.
Bitcoin is the leader. Ethereum is #2. And then you have hundreds of altcoins.
Okay.
An alternative currency. And the idea here is Bitcoin is becoming almost like your insurance policy for your portfolio.
Okay.
Traditionally, when I'm talking to investors, I'm encouraging them to have one stock that goes opposite to the market. And that could be, traditionally has been gold or silver. And today, Bitcoin is often being used in that bundle.
Okay.
2 to 5% of your portfolio. So say you put 10 grand in, having $500, $200 in a insurance policy like a gold or a silver or a Bitcoin might be a way to play it, particularly for a boomer.
Right. Right on.
My son Justin's been quite active in the cryptocurrency industry. As a student, it's where he did his internship. And so we're encouraging him to not only learn about it, yet also teach us elderly. And in fact, starting an investment group and having people share their opinions and being able to discuss it without being attacked. And that's one of the things that you and I have been doing with Canada Startup and a couple of forums we're in, is to share best practices. Yet also, if you got more people looking for opportunities, they can bring it in. And then each of us have our own way of deciding what suits our own personality.
Yes.
And so
very good.
If you had a little Bitcoin, one of the ways that you can explore it is go and get an account set up.
Okay.
That would definitely be good. Today, we've done what's called paper trading, putting together your portfolio, inviting you to go to Yahoo Finance and put in your 6 stocks. Say, use $5,000 as an example across 6 or 7 holdings, and just get used to putting that information in, start tracking it, start looking at it, start a relationship with it. You'll start getting the information. If you want to move and make an appointment in the next week or the next month that you'd like to make an investment, and then we'll have an opportunity to follow up. And what's really beautiful, I'll create one for you, because I've got a whole sheet of investment portfolios that I've done with people.
Okay.
And I think you've seen some of them on YouTube on Continual Shift. We did one for Deb, which was the boomer strategy. I did one for my nephew, who's millennial. I did some for some women and some men, and to help people get comfortable with making some investments.
No, that's cool.
And so that is definitely the invitation for you to start with your, it sounds like a great portfolio, because you've got a mix of interests like Disney, experience that you have like Bell Canada, growth, but also technology, and a leader in pretty much the whole world. Apple, Enbridge, a good stable dividend. TD, a lovely dividend also. So
cool.
just think about it. Your TD is probably going to deliver about a 5% dividend. BCE, Bell Canada, will be a 6, and Enbridge will be an 8. That's nice. A solid portfolio. And then if you have a Tesla or NEO as one of your flyers, and then you may decide to have a little Bitcoin or an Ethereum or an altcoin to play with. You could also check out, and I'll send you the link of this for Wealth Simple. You can set up an account. It doesn't cost you any money. You can transfer over a little bit just to get started, because this device now allows you to do trading and noticing the market. And today I actually made a couple of investments in some of the cannabis shares.
Oh, cool.
As a way to experiment and to have some fun with the markets that ought to be bullish, yet we also are aware that, yes, the markets can go down. It's not when you sell, it's if you have some powder remaining that you can actually make investments when we have a sell-off.
Right on.
So with that, would you have any other questions or any wrap-up for tonight on picking a portfolio for a boomer?
This was great. I think I've never really gone through the process like this before, but when you think of the different areas we went through, like the financial, the communication, technology, energy, and then fun stuff that you like, products that you use, and it makes it so much easier. I mean, it's just, you can go walk around the house and say, oh, I really love that. I don't like that, but I love to eat that. I like to listen to that music. And next thing you know, your whole portfolio is built.
My son, when he was 12, and I introduced this to him, and we put together the portfolio, and it was great because he picked the Apple and he picked Disney. And it got to a point where when he was walking in the mall in Singapore, and he saw a product called SodaStream, and he wanted it. But instead of coming to me and say, Daddy, buy me a SodaStream, it was like, can we check that company? And so we went online, we checked it, we saw it. It looked like a hot stock. Yeah. And I said, I'm going to buy 10 shares of it for you, and we'll watch it. And within a couple of weeks, it went up to a point where we were able to sell half the stocks, and he got his SodaStream for free.
Nice. That's awesome.
That is what a fun way. That is called, that is the strategy of Peter Lynch. If any of our investors want to really dig in, Peter Lynch was one of the greatest fund managers of all time. And he had this concept of walking around and noticing where the lineups were. And that was his trigger to invest. And so I've been a big fan of Peter Lynch, big fan of Warren Buffett, big fan of Mr. Graham. So these are guys that have a lot of analysis. They combine fundamental with technical, yet all of them would agree, get started.
Yeah, actually, excuse me, you bring up a good bit there. Like, as a boomer, who, a lot of us still like to read, who would you say maybe 3 to 5 people to read? Like you've mentioned, Peter Lynch, Warren Buffett. Who would be somebody good to read that would, I guess that we would be able to relate to a bit more?
Well, if you're interested in, that's where I did my 5 favorite finance books yesterday. I did a list because, as you know, I've been doing Meet the Author, and I've expanded it to like my top 5 authors for motivation, for spiritual, for investing. So I do love Peter Lynch's book. One Up on Wall Street. It is a great book to actually notice how he picked his stocks. And the distillation is what we've just said. Go around interesting products, interesting services, go and then do some research. Number 2, what might be an interesting book for you is The Millionaire Next Door. And that's the profile of the person who becomes a millionaire in the States. And that would surprise you, is that stereotypical millionaire is somebody who's lived in the same house for 25 years, is driving a used car, has had consistent savings for over 30 years, and she allowed themselves to spend less than they earn. That's the distillation.
Right on.
Millionaire Next Door. Warren Buffett's great to read books about him. Yet what's really fun is to go look at his portfolio. You can do that by going on his website and reading one of his annual reviews, which he posts. and it shows you which stocks he holds. Like he would be suggesting you to go buy Coca-Cola. He's owned Coca-Cola for 40 years. He loves that stock. He drinks
Right
8 of them today, every day. He loves icons. He loves brands.
Right on.
And he's been a major advocate of that. So that would be another strategy. And then if you want a little bit more about being a trader / investor, there's a book called The Market Wizards by Jack Schwager. And Jack was my teacher when I made the shift from risk management to be a trader. What was really useful about that was to see how people took profits. So he interviews some of the top traders in the world, and they tell him their strategy of trading. They all had different strategies about how to take profits, yet they all had a similarity, and that's very strict risk management approaches. And so again, that's something that I'm suggesting to you is your diversification will allow you to manage the risk and sleep well at night.
Nice.
And that is a key component, is that we don't want to do this that keeps us up at night, that we've leveraged, that we could lose our house. No, we want to have this as we're learning, we're growing, we have a new interest, and an interest that could actually, A, make you some money. B,
that'd be good.
definitely teach you something. C, having some conversation that's very relevant and positive.
Yes, definitely. It's definitely very interesting, and the more I talk with you about it, the more I see that, okay, you know what? It's you can get into it and you don't have to be totally overwhelmed by it. There is a nice gentle way to ease in, and you can do it with a lot of stuff that you know. It's not such a big rocket science, I guess.
Well, it can be rocket science, and it can be PhD, Nobel Prize winning level, yet it can also be something that take back your responsibility for your finances. People who've given all of their responsibility for their health, given all their responsibility for their wealth, given all their responsibility for their learning away, are feeling like victims. When you start to do it for yourself, it's very liberating. It's very enabling. It's very powerful to own your ship, to go and make some conscious choices that you're responsible for and you're able to respond, as opposed to, oh, my financial advisor advised me that and I lost money. And then it's just the blame mentality. And that's where I guess I'm inviting people today. If you like this, please hit a like, add a comment, add a question, because we really are interested to share this with people in Canada, yet all around the world, given that Facebook and YouTube, they're going all around the world. And we're in this to learn and to share and to perhaps add some value to people.
Yes, definitely.
And so with that, Bill, any last questions before we give it a wrap, or is that good for today?
I'm good, man. My head's just spinning right now. It's excellent. This is a blast. It's really good.
All right. Well, thank you so much for dancing today, passing the puck. Hopefully in the next little while, we might be able to go for an ice skate. We'll see what happens here. I understand we're going under a further lockdown here.
Further lockdown, yeah.
But hopefully you stay well, stay healthy, stay safe, and may the markets be with you.
Thank you. And to you. Thanks, Dave.